No end in sight to the pessimism in global markets, risk appetite and international stock markets, although an optimist would say every day is bringing us closer to the next bull market. For our ASX 200 index, we've suffered in sympathy with falling oil and commodity prices, spurred by concerns around China's slowing economy and their currency pressures, and out of Europe, pressure on industrial and finance sector shares. Meanwhile, the USA, which had been the shining light of the global economy, is now faced with the challenge of rising interest rates amid signs that they are closer to their peak in the economic cycle, all a cocktail for uncertainty and therefore market volatility. Here in Australia, the question remains, can we hold our nerve as the rest of the world looks increasingly challenged? Consumer confidence and equity prices are generally well correlated. However, for now, fortunately, consumers are coping with the latest market pressures and the confidence level has risen to its highest reading since November. It's 24 years since the last recession here, and so Australia has demonstrated resilience time and time again from offshore shocks. We will see this year if we can make it 25 years in a row. One of the main ingredients to this resilience has been the ability of the Aussie dollar to devalue quickly when offshore demand has fallen, and this will be crucial in the months ahead. If conditions continue to deteriorate overseas, especially in China, presumably the Aussie dollar will fall to reflect falling offshore demand. Whereas if things improve, the Aussie can recover to a degree with no adverse impacts. In the interim, the lower Aussie dollar is welcome for businesses, helping with tourism, manufacturing and export markets. For the moment, an Aussie dollar in the range of 69 to 74 cents seems likely. As we mentioned last week, the best measure of how stressed or otherwise the condition of our economy is will be the jobs market, and the next read of unemployment out on Thursday will be important for businesses to monitor to gauge likely trends in demand and retail activity. Our Reserve Bank have pointed out that the momentum in the jobs market is currently ahead of trend, and a range of indicators support this continuing as long as business confidence keeps its nerve. For 24 years, this resilience has been the rule rather than the exception. I'll see you next week for the next market update from Bendigo Bank.